Welcome to The Explainer. Every year, the union budget pretty much sets the economic game plan for the whole country. So today, we're going to unpack the numbers, the policies, and the big vision behind India's budget for 2026-27.
So the finance minister has called this a Yuva Shakti-driven budget, basically a budget powered by the youth. Now, this isn't just some catchy slogan. It's a real signal about where the focus is. A lot of these proposals are actually inspired by ideas from young leaders, and the goal is to turn all that demographic energy into real economic growth. So what does that actually mean in practice?
Okay, let's dive right in. Here's how we're going to break it all down. We'll start with the big mission, then get into the 5 biggest announcements. After that, we'll look at the government's checkbook, see which sectors are getting a boost, and then get to the part everyone wants to know, what's new with taxes. And finally, we'll zoom out and look at the bigger economic picture.
First up, every budget has a core idea, a philosophy behind it. So what's the single big theme that's driving all of these decisions?
You heard it right there from the finance minister herself. The mission is super clear. This is all about growth, doubling down on long-term structural changes instead of short-term freebies. The whole strategy is to empower young people, build up our own manufacturing so we rely less on imports, and just keep pushing hard on public investment to build a strong foundation for the future.
All right, now for the really juicy stuff. We've gone through the whole speech and pulled out the 5 most important announcements that could seriously reshape India's economy.
First up, and this one's a biggie, there's a huge strategic push into a really high-value industry. The Biopharma Shakti mission. That's a 10,000 crore rupee bet on making India a world leader in advanced medicines. We're talking about those complex drugs made from living cells, the ones used to fight things like cancer. This is all about grabbing a piece of the next frontier in pharma. Number 2, the government is seriously doubling down on infrastructure. Capital expenditure, or CAPEX, is getting a massive boost, up to a record 12.2 lakh crore rupees. This is the money that builds our roads, railways, and ports. Think of it as the engine for growth and for creating a ton of jobs.
Coming in at number 3 is a huge focus on the services sector. A new high-powered committee is being set up to figure out how we can make India a global powerhouse in services. The goal? To capture 10% of the entire global market by 2047. It's all about creating high-quality jobs for our young, ambitious workforce.
Fourth, and listen up, because this affects everyone. The old Income Tax Act from 1961 is being totally replaced. A brand new, simplified tax law is on its way. The promise is simpler forms, simpler rules, making it way easier for all of us to file our taxes without pulling our hair out. This is a fundamental rewrite of the entire tax code.
And fifth, a major shot in the arm for small and medium businesses. A new 10,000 crore rupee SME growth fund is being set up. And get this, it's not a loan, it's equity support. It's about giving promising small companies the capital they need to grow into the big champions of tomorrow. It's all about strengthening the backbone of our economy.
So all these big ideas sound great, right? But they cost money, a lot of money. So let's open up the books and take a look at the government's financial report card for the year.
Okay, let's talk about this number, 4.3%. That's the new target for the fiscal deficit. Now, in simple terms, that's just the gap between what the government spends and what it earns. A lower number is a good thing. It signals financial discipline, and believe me, global investors watch this number like a hawk.
And this chart, it tells a really important story. You can see a very clear, steady downward path. Moving from 4.4% last year to 4.3% this year shows a real commitment to being responsible with the country's finances, which is key to keeping inflation under control.
So what's crucial here is how the government is spending its money. And we see that number again, 12.2 lakh crores. That's the target for capital expenditure. Remember, this isn't for day-to-day bills. This is an investment in creating long-term assets for the country.
And just to see how big a deal this is, look at this chart. You can see that significant jump from 11 lakh crore in the previous year. This consistent ramping up of infrastructure spending is really the core of the government strategy to fire up the economy and get private companies to invest more too.
Okay, so we know how much they're spending, but where's all that cash actually going? Let's do a deep dive and see which parts of the economy are getting the biggest slice of the pie.
This table really lays it all out for us, doesn't it? The priorities are absolutely crystal clear. Infrastructure, no surprise, gets the lion's share to boost growth. Manufacturing, especially in cool, high-tech areas like electronics and biopharma, gets a lot of support. Then there's a big push for energy and green tech, strong support for small businesses, and a major investment in what's called human capital, basically skilling up our people to build a future-ready workforce.
All right, now for the part I know you've been waiting for. How does all of this affect your wallet? From your salary to your small business, let's talk taxes. So, the big theme here is ease of living and ease of doing business. For salaried folks, there are some nice little reliefs, like a lower tax you have to pay up front on overseas tour packages and more time to fix any mistakes on your tax return. And for all you small business owners out there, the changes are even bigger. Things like turning some penalties into simple fees and decriminalizing minor slip-ups to cut down on legal hassles. It's all about reducing that compliance headache. Okay, let's zoom out. We've looked at the big ideas, the spending, the taxes. So, what does this whole puzzle look like when you put it all together? What does it mean for the economy and the markets?
Well, for anyone watching the stock market, this budget sends some pretty clear signals. All that spending on infrastructure is obviously a huge positive for related companies. The focus on financial discipline should help keep inflation in check. And there are new tax breaks designed to pull in more foreign investment. The one little catch? A slight tax hike for derivatives trading, which might just pinch the high-frequency traders a bit.
But, a good analysis means looking at what's not there too. It's not just about what was in the budget, but also what was missing. So what big challenges didn't get as much attention? So what you see is a budget that's really focused on the supply side. That is, building things and creating capacity. But there aren't a lot of big, direct programs to tackle unemployment or give an immediate boost to spending in rural areas. The government is basically betting that the huge infrastructure push will eventually create jobs and income down the line. But it does leave you wondering if a bit more immediate support was needed right now.
And that really brings us to the final multi-trillion rupee question, doesn't it? This budget is making a massive bet on a long-term strategy. Fix the foundations, be smart with money, and build our own manufacturing power. But in a world that's pretty turbulent and uncertain, will this patient, foundational approach be enough to weather the storms and lock in India's economic future? I guess that's the question we'll all see answered over the next year.